Welcome to ETF Wrap, your weekly digest of the top stories in European ETFs. This week, we examined how small ETF issuers are being overshadowed, even in niche corners of the market. Elsewhere, BlackRock said algorithmic trading of ETFs is helping markets to navigate the fragmented European ecosystem. And finally, BNP Paribas goes active without alpha with its first active ETFs. First, we examine how small ETF providers face an uphill battle, even in growing segments such as thematic and active ETFs. In thematics, smaller issuers accuse large players, including BlackRock, of copycatting their best ideas, after the firm's delayed entry into metaverse, defense, and copper mining ETFs. Interestingly, BlackRock was the first to file a UCITS defense ETF in 2018, but held fire until products from VanEck and Han ETF began gaining traction after launching last year. Smaller providers warned large players benefit from vast internal and external distribution networks, and small players need to be rewarded for their innovations, or otherwise they will cease to exist. Elsewhere, in Europe's nascent active ETF space, the market is already dominated by mutual fund giants wrapping their existing strategies within ETFs. Leading the charge is JP Morgan Asset Management, which has cornered 43% of the market since entering in 2018 and claimed 78% of all active ETF inflows in Europe last year. This early dominance, smaller providers warn, prevents them from entering the space, and in the long run could mean that original IP is not provided through active ETFs. Next, a report from BlackRock suggested algorithmic ETF trading could help navigate the fragmented European ecosystem. The world's largest asset manager said algos offer benefits such as reduced trading costs, improved sourcing of liquidity, and minimizing the premium impact of large trades. However, ETF execution is currently dominated by RFQ platforms, which accounted for 55% of trades in 2022 versus 5% for algos. The opposite is true in cash equities, where 65% of trades are done using algos. Perhaps increased usage in ETFs will be a driver of future volumes on exchange. Finally, ETF Stream revealed BNP Paribas Asset Management has entered the active space with 2 ESG fixed income ETFs. Interestingly, both ETFs are not seeking to generate alpha and instead look to minimize tracking error with an index-like approach. The rationale, BNP said, is to implement the firm's proprietary ESG and exclusionary methodology. Having previously partnered on custom ESG indices, the firm said its new ETFs are nimble enough to exclude controversial issuers without having to wait for index rebalances. And that's a wrap for this week. Thanks for joining us, and hit subscribe to keep up to date with all the latest in ETFs. Until next Friday, take care.